Everything you need to know about products and services that can improve your life. This is Experts on Call on CL 650.
And welcome back to Key Pacific's Talk About Strata. We are talking about insurance, and we're talking about insurance and restoration from a homeowner's perspective. And we have Gordon Lee from CMW Insurance and Albert Atfield from CanStar Restorations. And Gordon, we were just talking about what happens when you end up with an insurance deductible that you're responsible for. So I'm the homeowner. I had a toilet tank in my unit that failed. There'd been a recall, didn't get it upgraded, or my dishwasher has failed, or the bathtub's overflowed, something that's occurred within my strata lot that I'm eventually probably going to be responsible for all those costs related to, or the insurance deductible. Strata is a $25,000 insurance deductible, so how do I deal with that?
Well, most likely if your property manager or your strata corporation will be sending you a letter advising you that, we found you to be responsible, or the leak came out of your unit, and refer to the bylaws of a strata and says, therefore, we're sending you this bill. Once that happens, usually if you would contact your insurance provider, which you probably would have already because your unit is affected, and forward them that bill. And under that particular policy, there should be some coverage in there, and a lot of times there's going to be a sublimit involved. So hopefully if you did your homework, your broker would have provided your policy that covered up to $25,000 for that deductible, and they would look after that bill for you, Tony.
So it's essential as a homeowner that when I get my notice of insurance from the strata each year, it's usually part of our annual general meeting, or the strata provides it. When they renew it, they send it to all the homeowners and the tenants. It's important that when I get that document, I take that document when I'm buying my homeowner policy, because then the broker who's helping me with my homeowner policy can actually see what my deductibles might potentially be, and we can start to marry some of those things up.
Yes, you should do that when you set up the policy, and every year you renew, because that strata deductible, what we've seen over the years, has increased over time. So I can appreciate someone might have purchased the policy 2-3 years ago with and that strata originally had $5,000 deductible, but today potentially could have $25,000 deductible, and
right.
So they need to also make sure that they check with the broker on a yearly basis, if there's any changes to the deductible of the stratas.
Is there a point when this becomes ridiculous or only self-insured? So the strata has a deductible of $100,000 now because of so many incidents, summer vandalism, summer maintenance. Is there a point where a homeowner can no longer buy insurance to cover that?
It would get very difficult. I would say anything over $25,000 gets a little difficult in the marketplace, but it's still available. I think if you shop around hard enough, it might cost you a couple $100 more here or there, but
right.
I believe there's a few companies that's willing to still offer coverage up to $100,000 or $200,000 coverage for your deductible.
Right. So, but $100 or $200 invested in my insurance policy of the year, it is a big difference between $25,000 or $50,000 I might have to pay out of my pocket.
Oh, for sure. I just look at it as, whether it costs $2,000 to get that cover and reduce the liability to next to zero, or have this liability hang over my head that could be $250,000. I think
right.
It just makes common sense to say, spend the $200 a month or so and not to worry about it.
$200 a year.
Well,
your policy is not going to be $200 more a month. Your policy though is going to be
it could be $200 a year, or
right.
it could be $2,000 a year,
right.
for a higher deductible limit. But
right.
regardless of that, I think that's still affordable to most people versus $250,000. I think very few people would have that money except to
most people
walk away from the unit.
They would lose their homes,
yes.
Which is one of the complications that we have, because even though the strata corporation deems that you're responsible, it's still just a claim, right? This is not a secured debt against your strata lot. So that's one of the challenges that we have. So the strata's collection process, now that we have a 2-year limitation period on collections, has to be fairly aggressive and fairly active.
Mm-hmm.
So if you don't pay the amount, strata has to get to court at a fairly quick rate to get a judgment for it. They basically have the judgment registered against your strata lot. But even then, it's not going to take a priority over top of the strata corporation strata fees, special levies, or the mortgage that's on the property. So, so from an insurance perspective, strata corporations may still collectively find, if this owner has no assets, the strata might still be absorbing the bills for that deductible.
Yeah.
Right? And that's, and as we move forward with buildings that age, there are more claims because there are more failures. We have building systems that are more expensive. Albert, we do a major restoration on a building that was built in the 1970s and has a major fire or an event. What's one of the first things that's going to cause the expenses to inflate so much?
Well, you're going to deal with asbestos remediation probably in 9 out of 10 cases. So that in itself is going to probably triple your costs just to do the cleanup portion. So there's one example. And then, of course, you've got code upgrades that could be come into play. Just there's a variety of different issues that come into play. And also, if you have older hardwood floors and stuff in some of the older buildings, remember those are extremely high cost because
Right.
some of them are very artistic and take a lot of work to get them resolved.
So how do we make sure as a strata, Gordon, that we have all these values properly assessed for that fire that could happen today?
Usually, when strata insurance is put in place, part of how the value comes about was an appraisal that's done by the strata corporation, by a professional appraisal company that assess the current replacement value
Right.
of that strata corporation. So those things would include, for example, Tony, like a building that's in 70, they would include, though, the appraisal would say, to current code, sprinkler systems, certain securities, those bylaws that are put in place, so that the value, when you look at it, compared to the value what the building is, there might be a little bit higher, because you have to understand that bylaws and codes are going to be enforced.
Right. So, and we're dealing with the appraisal process. The strata corporation hires an independent appraiser who comes in. They appraise the value. This is not market value. This is what it would cost to rebuild or reconstruct this building today. That's what
Yes.
that's what the insurance provider's requirement is.
Yes.
So we raised environmental issues, asbestos abatement. We also have environmental issues in other types of strata corporations, bareland stratas, for example, and townhouse complexes that are along rivers and streams. There may be environmental exposures they want to look at for additional insurance. And so, again, things that are optional but that a strata corporation can purchase.
Mm-hmm.
What about, here's the other question for the insurance side. Everyone is struggling, and I think they're overwhelmed with the capacity of cost of earthquake insurance. So the strata corporation has earthquake insurance, but the deductibles are 10, 15, or in some cases 20% of the appraised value of the building. So if our 100-unit high-rise building has an appraised value of $27 million and we have a $10,000, 10% deductible, our deductible is $2.7 million. How do the homeowners pay for the deductible?
Well, the homeowner is probably going to be, I think, the thing is that the best thing is to have insurance again. If they have proper insurance, most of the insurance today would provide coverage for
Right.
that special assessment, for that deductible against the unit owner. Most of them, I think, today generally sits around $25,000.
Right.
So I think on average it would cover up to 80-90%, if not 100% of that deductible assessed to those unit owners in the event of an earthquake.
So it really is important for homeowners when they're buying their homeowner insurance. They need the policy of the strata corporation so that they can fill in the gaps of the things that otherwise aren't going to be covered or they potentially might be exposed to.
Yes. Huge value. I think it's those policies provide so much coverage where there's so much gaps in deductible coverages and various things that it just really, to me, doesn't really make sense. Most people think, wow, $200-300 a year is so expensive to buy one of these policies. When you see one of these policies get activated, you see how much it pays out. You go, man, that is great value.
Yeah, no kidding. Albert, we're running out of time. Last minute tip for everybody when it comes to a disaster that occurs?
Well, if you want a last minute tip of anything, if you're going on a vacation, try and turn off all your water supplies so that your home's secure. And if you do have an escape, report it quickly. I think that's the key piece, is that you get on it right away, and that it eliminates a lot of the damages and keeps the costs under control.
Which is good for the homeowner, good for the strata corporation, good for the insurance provider. I'm Tony Gioventu. Thank you very much, both of you,
Thank you.
For joining us
Thank
on
you,
the show.
Tony.
Everyone have a happy holiday, and we'll see you in the new year as we talk about strata.
Melikilikimaka is a thing to say on a bright Hawaiian Christmas day.